In chapter 12, you learned about payroll and you learned how to figure out how much to pay each employee, and you recorded it on the payroll register. And we learned a little bit about taxes. So, in this chapter, we're going to learn about how to actually do the transactions for those um, payroll activities. So, here's your payroll register, and the total of the gross earnings, or also called total earnings, for all your employees is going to be posted to an account called salary expense. So when we look at our payroll registers and we look at those first three columns, it's going to be this total right here of our total earnings. So all the total of all of the money that all of your employees made for this pay period. That is what your salary expense is going to be. So when we analyze this and look at making this payment, because you've got to pay your employees and you've held out all these taxes and everything. So where do they go from here? So when we do this transaction, you're going to have a debit to salary expense, and then you're going to have a credit to all of these payables. So if we look at our deduction columns right here, we have federal income tax. That's money you've withheld out of your employees' paychecks. Social Security tax, Medicare tax. Those are all taxes that we have to owe to the government. Basically, what happens is you hold those out of your employees' checks and you hold on to them until you pay them into the government, typically quarterly. So they all go into a liability accounts with the names: federal employee income tax payable, Social Security tax payable, Medicare tax payable, and you hold them in those accounts until you write the checks to the government. Payables are liabilities. Liabilities are on the right-hand side of the accounting equation, and they have a credit balance. Therefore, they are credited. Then you have health insurance and retirement, and they work just like those taxes. We have to eventually pay those in. That health insurance premium payable has to be paid to the health insurance company, and the retirement contributions have to be paid into that. So those are all liabilities with credit balances. So you have this total earnings. What they made is a debit to salary expense. Everything that you withheld from their checks goes into those liability accounts. And then your total earnings minus your deductions is your net pay, which is the amount of the checks. And that is our credit then to cash. And when you journalize that, it looks like this: a debit to salary expense, credit to all those payable accounts, and your credit to cash. Your debits equal your credits. This goes in the cash payments journal because you're writing a check for that amount of money. And so that goes into the cash payments journal. So you do your date, your debit, your check number, your total earnings, your cash, and then you do all of your payable accounts. And that's all that lesson 13.1 is about.